Hi, this is Joseph. It's Wednesday. It's April 28th. I wanted to show you a quick trade that was executed with the trade copier. And the reason I'm making this video is I get this question on a regular basis. And it's from prospective trade copier subscribers. They're interested in what kind of trading system is it that I use and how do I base my trading decisions? What is it that I'm looking for as far as confirmation? What's my trading style? What time frames do I trade off of? Which pairs? So if you look on the homepage of the BestForex trade copier, you'll see that there are other markets that I actually trade, and I don't have trades in those markets every single day at all times. I do primarily trade the Forex, but I do get trades with Bitcoin, other cryptocurrencies. I also trade indices, and I trade commodities as well. So I can trade oil, silver, gold, whenever they trigger some kind of an opportunity. And like I said, I'm not in those trades at all times every day. It's just when there's a choice opportunity. And what I use to actually classify and to confirm my trades is point and figure. Now, there aren't too many people on the internet that really talk about point and figure because they don't study it too deeply. and I'm not knocking anybody who does trade point and figure. It's just that it does take a lot of practice. It takes a lot of study. It takes a lot of I think that one of the ways to gain a lot of insight with point and figure is to actually make your own point and figure charts with graph paper by hand. You learn a lot by doing that, and I did that in the beginning of my trading career. So many of you already know that I started my trading career back in 2001. So I've been using point and figure for a really long time, and point and figure, out of all the trading systems and all the trading strategies and techniques that I've used, it is by far the most accurate way of calculating and measuring how far price is likely to go from the time I get into a trade. So you'll hear very often that with a lot of these other signal services or trade copier services, they'll tell you that, in some cases they'll tell you that their trades are always like 2-for-1 reward to risk. Sometimes they'll say it's a 3-for-1, but it isn't always like that. They're lying in many cases. They're just saying that because they know that that's what the public wants to generally hear. And sometimes you get into a trade you think is going to go 2-for-1, and it ends up being like a 1-for-1 trade. And there's nothing wrong with that either. But just some people prefer to have certain risk to rewards balanced in their favor, and it's all a personal preference. But with the trade copier, I'm always looking for at least 1-to-1, but very often these trades will lead to 2-for-1 or 3-for-1, meaning the reward to risk. So the way that I calculate that is using the point and figure charts. Now, I'm not going to get into a trading lesson on how to use point and figure because that's probably not what you want to hear. You're more interested in what is it that I'm doing when I execute a trade with the trade copier, because this is what's ultimately going to generate profits into your MT4 account. So you need to know who's trading for you. I manually execute each one of these trades, and this is what I look for as far as confirmation. So based on the amount of data that's here on this chart in this area of accumulation, this is actually an area of reaccumulation in this uptrend, but nevertheless, it still gives me an opportunity. So there's several different ways that I can develop the count line, which is how far price is going to go from the actual entry. So there are different types of entries. In this case, this was a triple top entry. Sometimes I use a double top or triple bottom, double bottom. There's many different forms of strategies that you can use with the point and figure chart. And one of the things that you'll notice with the point and figure chart is that when it creates levels of support and resistance, very often they're very clearly defined. So I'm not likely to get into a head fake. So if I, let's say, put this support down here at the lows, you'll see that it creates a very solidified level of support. And none of these zeros in these down columns were ever going to bait me or trick me or tempt me into going short. And that's one of the things that I see with a lot of traders. They'll look at candlestick patterns or candlestick charts or bar charts, and sometimes you'll get that wick, and sometimes it'll take out the low and it looks like it's going to go lower, and people will short at the lows thinking it's going to be the extension of a continued move to the downside, and then it reverses and goes back up. Well, there's a lot of reasons why that happens. I talk about that in some of my modules. I actually do a little bit of live training and send out videos with each one of these trades, such as today, to give you a little taste and a little insight as far as how my trading system works and how I use it. So there are ways that I calculate and determine what phase price is in within this range of consolidation. This would be, again, an area of reaccumulation. So there would be phase A, phase B, phase C, and then phase D on the breakout. So that's what I'm looking at here at this point, where price is currently. So in phase C, I see the tests of the lows, and then it starts to move back up. And one of the things that you'll notice about point and figure, and I noticed this right away when I first started using it, is that point and figure isn't based on time. So you don't get another column of X's or zeros. based on, let's say, a 30-minute chart or a 1 hour chart. When at the end of that time, at the end of that block of time, you start a new candle or something to that effect. That's not how this works. Point and figure works based on the amount of volatility that's available at any given time. So if there's low volatility, low participation, low volume, it'll move around sideways inside of a range of consolidation. It really doesn't do anything. But from the time it actually gets ready to break out, from the time I get into the trades, I usually don't have to worry about the trades, and they move pretty consistently to their take profit target like this pretty fast. Not all of them are going to move as quick as this one, but what I want you to understand is that from the time I get into the trade, I'm usually in profitability, and then it's just a matter of a little more time before the rest of the participants at that time get into the market and start moving and driving price higher. So I also mentioned the count. So one of the things that point and figure helps me do is determine how far price is going to go and where I should take profits. With a lot of traders, and I do some private coaching, so I see this even with people that have like 5 and 10 years experience. Sometimes they never learn how to calculate how far price goes. So you've probably been there, we've all been there at some point in time in our trading career, where you get into a trade and you take, like, let's say 7 or 8 pips on a trade, and then it continues another 40 pips, and you look at the trade and you go, wow, I left a lot of money on the table. How do I avoid that? How can I get more of these bigger moves? And then the next time you remember that you left a lot of money on the table, so the next time you see a trade it's similar, you get into the trade, you hold a little bit longer, but then it ends up not working out. It doesn't go very far, and then you get stopped out and you give back all your profits. So how do you figure that out? And point and figure helps me calculate that. So you'll notice with these 2 little bars right here, I had one first minimum count. I talk about this quite a bit when I do my coaching. I talk about the fact that what I'm doing here is finding a first target, a second target, and then maybe even a third target. And a third target would take into consideration all of the data here within this range of consolidation. The first target is the minimum count. It's the minimum target. So let's say if it continues to remain inside of this consolidation, I'm still going to hit my take profit target. Based on the data right here, I had an entry at 87, and I had a target here at 1.3918. Well, it went to 20. That's a psychological level, and I was able to squeeze out an extra pip because I figured it was going to go to 20. That's usually a target that I trade it to anyway, but they lined up together. The target that the point and figure gave me, and then the psychological level that I would normally trade it to anyway. And it was relatively easy to wait and watch price run into the 1.3920 area. This generated a total of 40 pips. Now, if you're trading standard lots, that could be $400. If you're trading mini lots, that would be $40. That's not bad on a single day trade. This was not the only trade available today, but it was the one here on the pound dollar. And then it actually gave me another breakout and another little opportunity to scalp a few more pips to the upside again. So it was a really good day. It was simple. There are times when I get a trade like this for day trades on the pound dollar and it ends up generating 120 pips. It happens. It just doesn't happen every day. Every day is a little bit different. But what I want you to understand is this is what I use to calculate my entries, to calculate how far or how long I could hold on to the trades before I have to close out the trade and take profits. Again, a lot of people with a very limited amount of experience, traders out there, they hold on to their trades too long, so they give back profits, or they don't make enough profitability in the trade because it goes a lot further, and they don't know how to figure that out. Point and figure tells me how far price is going to go because I calculate the number of columns here in this first range based on the way I constructed this chart. That's how I determine the count. And then if it's going to go to a second target like it did, I can go beyond that first range here and incorporate these columns here for an additional count. And then if it continues and trends higher, well, I'm going to see that also in the larger time frames, like let's say a candlestick chart or a bar chart. But I can also incorporate all of the data within this consolidation phase, and that's going to give me a much higher count, which would be, let's say, my second or my third target. But I always want to lock in profits at my first target just in case. And again, it's a healthy trade. We're not scalping here. We're not taking 3 pips, 4 pips, 5 pips. We're taking 40 pips on these trades. And then here, this was a relatively small one, but it's towards the end of the day. This was just a day trade. This was not like a daily time frame. So it's a very, very profitable method of trading. And you'll notice that I'm not getting into trades when price is moving around in these really choppy ranges of consolidation. I avoid that. That's where people tend to lose. That's where traders tend to lose most of their money. They give back profits, they make some profits, they give back profits, and they make some profits, and it just goes on, and they don't know how to stay out of the markets like this. So point and figure tells me where these clear levels of support and resistance are, when price is likely to start breaking out and rallying and trending for the day, And I can get in on a day trade like this and pick up anywhere from 40 pips to 120 pips. In some cases, I've earned over almost approximately 200 pips, like 190, and then there was another one that I picked up 210 pips on a day trade on the pound dollar. They don't happen every day, but they happen often enough. And you'll see that, I avoid trading inside of choppy, sloppy conditions. I take these very choice, very selective trade opportunities, and I know exactly where my stop loss is, and I know where my take profit is, so I can clearly see from the time I get into the trade, it's going to be a 2-for-1 or a 3-for-1, and I can determine that and calculate that. So these are really healthy profits. This is what I use. This is a trading strategy that I use when I execute trades with the trade copier. So if you'd like to get trades like this, you can get trades just like this. I will automatically open and close these trades and manage these trades for you. You don't even have to execute a single trade to make profits in your trading account. You attach the trade copier to your MT4 account. From that point on, I take over. Each one of the trades will look pretty much like this. And at the end of the day, I'll send out a video just like this one, and I'll explain exactly what I was doing. And eventually, over time, you'll start learning my method and my trading strategy. But again, if you don't want to trade, that's fine too. This is a great way to make money from your trading account without ever having to execute a trade. I've been doing this for 20 plus years. This is all I do. I trade day and night. I trade even on the weekends. I'm always studying my charts. I'm passionate about trading. I love trading, and I love helping other people that are trying to get into this business. It's a great opportunity for you to make money and profit from your trading account while you're slowly learning how to trade a trading system. You may like my trading system. You may not like it. That's okay. As long as it's profitable, it doesn't have to mean, it doesn't mean that you have to execute these trades like this. I will take care of everything for you, and I will execute and manage these trades for you. So if you'd like to use the trade copier, go to the purchase page, sign up. It only takes about 10 minutes or less to connect your account. From that point on, I take over. Thanks for watching.